Hello, folks. Welcome to State of the Market. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone today, which is Monday, November 3rd, 2025. Today's subject is basically data center, AI, kind of the focused area of strength in the market. The data center boom drives a narrow stock market rally, and that was true last week, and it remains true again today. So basically, I think it's interesting that we might actually be seeing this expand a little bit beyond just the kind of data center trade because we might be looking at some interesting sort of price action coming up in Tesla. Hasn't gotten that much attention, but on Thursday, the Tesla shareholders, I think it's the shareholders, um, maybe not the board, but you can check for yourself. But Tesla will have a big vote about Elon Musk's pay package. Let me show also here the standardized returns of some of the ETFs that we're going to be talking about. And here we go. Those are standardized returns. But basically, they're going to vote on Elon Musk's pay package, and that could have a big impact on the stock. I think it's very interesting to see some of the things happening in Tesla recently, because as much as everyone talks about the data centers and NVIDIA, there's also the potential that we're looking at something significant in Tesla, which could have another potentially positive impact on the large cap growth part of the stock market. Okay, now remember, go to tradestation.com. Up here on the main page, scroll down, you'll see an article. This is our article that today, a lot of the information we're going to be discussing is in the article. Data center boom drives narrow stock market rally. It has a guy working in a data center, construction worker. So this article is going to be kind of a lot of the points you're going to be making are in here. But I would just kind of start off, first of all, by mentioning that it's interesting to kind of look, some of the big conclusions I'm kind of making as I prepared was that sectors like materials and consumer staples are just really breaking down because they have very little, obviously, tech in them. Um, and so we're kind of seeing this real split in the market in multiple ways. This kind of secular technology growth, mostly AI, but a few other things as well, and then this kind of non-tech cyclical everything else. And it's really becoming increasingly evident. So we look here, for example, go back to the TradeStation really quick. I turned off my data, but it was accurate up to about 5 minutes ago, so it's pretty good. Look at key ETFs here. This shows us in the last week all the leadership, XLK, which is tech, XLY, stepping up to the plate. As we mentioned last week, was a potential. And we did talk about this last week on this very webinar when we looked at the big indexes. But also, what do we have here? We have semiconductors here kind of stepping in, which is kind of interesting to see as well. So, again, semiconductors and tech. So, this is really what we're seeing. And look at the kind of weakness in materials, real estate, this huge sea of red. And we have some real significant kind of negative breadth right now, but it's not necessarily a huge problem. So I'm just going to indicate that. And now I also want to highlight the fact that, as much as everyone talks about the events that are going on, even the Tesla thing I mentioned, NVIDIA reports earnings on the 19th of this month, 19th of November. It is the Wednesday, the 19th. That's when the market closed. And in my view, that might be the real thing that we want to be kind of focused on. Remember, you can see that on TradeStation over here with our earnings. We've showed this to you guys. Actually, mine's turned off, so I'm not going to show you. But basically, it's the 19th. Let me just move ahead now. So anyway, remember, November 19th. Maybe just bear that in mind. That might be kind of the you know the the thing that this market has in mind. That's the glittering object out in the over the horizon. Now, want to mention here, we look at Tesla. I think it's important that the weekly chart of Tesla. Tesla's here on pace. This is back when the election happened. Everyone thought, wow, Elon Musk is close with Trump. That's great. They ran it up, then crashed again, and here we are now, setting up for a potential breakout above that all-time high back in December. To me, it's a big deal. Beyond the pay package vote, I think it's important to realize you look at the history of Tesla. Back here, in 2012, 2013. This is when they first got the Model S operational. It's their first real kind of successful car, commercialized. Here in November, here in 2000, October, November, right before COVID, this was when they got a lot of their production issues worked out, and the stock had this big run. So these are both big breakthroughs in terms of product and technology and operational success. And now I just ask, with the robo taxis, they're really focusing on robo taxis. Elon Musk is really beating the table on that as kind of the goal of the company. And I just want to point that out because this is what some people would call kind of a. I mean, I've seen a lot of people interpret a lot of things as cup and handles, but this has a lot of aspects of a cup and handle in different ways, especially the way it kind of held this tight level as it escapes the consolidation pattern. So for me, there are certain things on this chart that whether you want to call it a cup and handle or not, this is the kind of like momentum growth stock that has had a long basing period, a long period of consolidation, even if you look at it back to 21. And then if you look at it on the more recent time frame, that people might look for this to have some very significant breakout potential if it does extend. And that vote on Thursday might be a big thing to kind of keep in mind. So this idea of the Elon Musk vote and then scaling the cyber cab going into the end of the year and early next year. So, I mean, it's kind of an AI trade, but it's kind of its own organic growth thing in general. So now Amazon today had this gap higher, all-time high on Amazon, and basically it has a deal with when OpenAI is going to use a whole bunch of their computing power for 7 years. It's also interesting that Amazon is also working with a company called Cipher, CIFR. This is a Bitcoin miner. It's interesting to see some of the Bitcoin miners outperform even with crypto not doing great for a few months now. And what's actually happening is some of these crypto miners are starting to actually work on AI. They're using some of their computing power for AI. This is kind of an emerging story. I want to talk about it. I know a whole lot about it, but I'm starting to realize it and I wanted to mention it. CIFR is one of those, but there have been others. Now, getting back to Amazon, though, I think it's important to realize also that Amazon, here it is breaking out to an all-time high as well, is also is actually maybe the bigger stock in the XLY. So these two together, Amazon and Tesla, look at the XLY here. I think we have to realize that this might actually be something that we're going to, might be sneaking toward a potential breakout on this index. So I think that's kind of worth paying attention to. I'll also mention that don't forget, so last week we saw Amazon, Meta, Google, Microsoft all increase their capital spending. We've seen increased signs of like the Saudis and sovereigns wanting to spend on AI. So again, this is something which has a very interesting demand and investment dynamic that goes beyond normal economic cycles. Might almost be like aircraft during the 1930s or something, when it's always just interesting to see the advances. I've always found it interesting historically to see how aircraft advanced in the 1930s during the Great Depression and things, and some of that was kind of based also on things like government spending in terms of military and stuff. So I mean, it's important to realize here that when you're in a new technology that's emerging, in some ways it can be non-cyclical to a certain extent. Yeah, it's true until it's not. Also, last week, C.H. Robinson, a trucking company, I mean, they had a strong earnings basically because they were using AI to manage costs and stuff. But it's interesting because this is exactly the kind of company that like is supposed to be, if you want to, see the narrative, it's exactly the kind of company that should be benefiting from AI, and it was. So I think it's interesting, and it does kind of show that people say AI is not generating a positive return on investment. I mean, there are cases where it's working, and it might not be exactly who you think is going to be the people benefiting from it, but there are things that are happening because of it, and that should not be overlooked. It's one of the reasons why we do this article. We always kind of go through the big movers and we help people kind of understand those trends that may otherwise kind of fall by the wayside. So that was thing about CH Robinson. Now I want to also mention here that if you really look at this trade, the real leaders, in my opinion, are Micron and Western Digital. I mean, they are not the biggest, but they are kind of the canaries in the coal mine. They've been the ones that have really been rampaging higher on this hardware spend. So, I mean, this is kind of ridiculous. Western Digital went from $30 to 150. I can't even believe it. The point, though, is that these stocks, in my view, I want to just mention, these could be the early ones to look for when these guys start to stall and break down. That can be something that might represent the kind of beginning of the end of this rally. However, we're obviously not there yet, but I want to just mention that their clear leadership at this phase, because this right now, we are in a phase of mass sort of capex that blows away what people expected. So these guys are some kind of canary in the coal mines you might want to kind of keep an eye on. Now, I want to jump over real quickly to our MT Breadth workspace. This is part of our market trends webinar we do on Thursdays. Now, I want to just point out, hopefully you can see this. This is my breadth of workspace of the S&P. But what's interesting here is you look at the stocks making new 52-week highs. Today it fell to 14, and there's 32 new lows. So we've had more new lows than new highs since the 29th, which was, I think, Wednesday of last week. So the breadth remains pretty poor. Today we have about 350 members of the S&P negative, and the S&P is still up kind of 0.2, 0.3%. So, I mean, that also kind of shows us that the leadership is coming from the biggest. The last new high for the advanced decline line was back here on Monday, the 27th. So the advanced decline line is falling. We have more stocks falling than rising. We have more stocks making 52-week lows and making 52-week highs. And that tells us that breadth is not good. However, in my view, like I've said many times, breadth, I think, has really lost its relevance in a lot of ways. And very often, positive breadth is actually a bearish sign because it shows that people are reaching for random stocks and they're not focusing on the leaders. So I want to just kind of mention that. Now, I want to just mention very briefly that we had one economic report today, the Institute for Supply Management's manufacturing report, and it actually showed some pretty significant improvement in inflationary trends. So we actually saw there were fewer companies reporting higher prices on the products on the intermediate goods they had to purchase, and then the there are fewer reports of higher prices and more reports of lower prices. So you can go and dig through the ISM report if you want, but the key thing is that it is showing, some signs of inflation moderating. At the same time, we have this process I've talked about at other times about, shelter costs coming down, property and casualty, insurance premiums coming down. So there are things out there that are the stickier parts of inflation that could perhaps be improving. So I just want to emphasize that is that the ISM is an interesting thing. The price index has been extremely high for a long time, and now, like shelter, it's showing signs of moderating. So from my view, I think that we might actually see a little bit more positive news on inflation than people expect next year based on some of these trends. And it might be something to just kind of think about. Now, also, it's interesting today that Tom Lee from Fundstrat said that he thinks the S&P could hit 7,500 by year end. I mean, I almost can't believe that, but he said it on CNBC. So, I mean, that would be significantly higher from here. And again, the idea, though, is that there is that concept of the market of people chasing to the upside into year end. And Paul Tudor Jones has said similar things. So just remember that those are some of the dynamics. I'll also very briefly mention here. Look at the at Western Digital. I want to just mention that we actually had talked about this one. I think back on October. Western Digital. We cited it back on October 16th over here because it came down and hit that 21-day exponential. So I did want to just mention that on our webinar we had talked about how this had happened. We wrote about it, but we've often talked about the EMA test that we include in our workspace that lets you find stocks as they pull back to the rising exponential moving average. So make sure to watch market trends on Thursday, and we'll give you more information about that. So a few other things before I get to the indexes is Las Vegas Sands has some very interesting performance in Singapore, and they have a property in Singapore that's been doing very well. If you look overall at some of the economic activity, despite some softness in China, we do have, I mean, whatever the data in China is, the Asian area has done tremendously well. South Korea, a lot of other areas, countries there have done well. Japan. So I want to just emphasize that there might be something happening over there with Singapore. And I think it's just important to realize that Las Vegas Sands has a catalyst that's probably not priced in by a lot of people of this property in Singapore. Another stock I want to just briefly mention that I've watched for a long time is Jabal Circuit, JBL. This is a company that does manufacturing of different kinds of technology equipment. They manufacture for other companies. It has benefited from the AI build out, and here it is going sideways since June. And people might actually think that this has some potential over the longer term to continue as part of this AI trade. That's Jabal, JBL. Now today we did a trading view idea on Nike, and this is one that is just overall, from my view, it's exactly that part of the market that we said is not doing well, and it's kind of potentially breaking with the risk of it's under this line today. I'm not sure if you'll see it here, but it kind of broke lower, and people might look for that move down toward that 52 area where that 52-week low is. But that's the part of the market that is not doing well, the non-tech, non-AI sort of area. So this week, remember, we have Tesla has that vote on Thursday. The Supreme Court is going to hear oral arguments on Trump's tariffs on Wednesday. There's several Fed speakers that we detail in our article. I'm not sure how important any of them really are. So now let's go to the weekly chart of the S&P 500. Remember, in this webinar on Mondays in State of the Market, we look at the big indexes mostly on weekly charts. Here's the S&P. I think what's interesting is we have a gap. Last Monday, we had a gap. We've held the gap. The gap was right here, this candle. And, we gapped up and, we filled some of it. But what I think is interesting is if you look in many ways on Wednesday, that was kind of where we kind of pause and then this advance. Now this, I think this is one way to view it. I'm not always sure. Sometimes with Fibonacci, it's often good to start on a Friday, but in this case, looking at a shorter term move, I think it's fair to say that this advance that ran between the 23rd and the 28th, we should look at the close on the 22nd to show the beginning of it. So if that's what we look at, we can see here that we've basically held a 50% retracement of it, which I think is something worth kind of being aware of and potentially important. Now, another thing we have in this chart is the MA, the MA streak. I'm going to put the 10-day simple on here. I think I have it. Here we go. So the 10-day simple moving average is one that I really like for the S&P. And what this kind of shows is it shows when it's running a long time. It kind of gives you a warning that this might be kind of extended, especially if it runs for more than 20 days. It doesn't tell you that anything's bearish, but it might just tell you, you're kind of you're getting to the party kind of late, and just to kind of bear that in mind. It doesn't mean the party's going to end, but it does mean that a lot has already happened. So this thing at different times has extended to like up to 45 days at different periods of strength, maybe 50 at sometimes. The key thing is that it is not rising very long. So we have this period of consolidation, and here's our first pullback to near the 10-day moving average, the simple, essentially since the move began. If you look at the 8-day exponential, which I don't have on this chart, but we basically held it. I think I have it over here in my article. If you look in this, you look at the chart in this article. Yeah, we have it in this chart. The blue line we held last week, and we're probably holding it again today. So all those things are kind of pointing in that direction. I mentioned the weak breadth, but overall, from my perspective here, as long as we more or less hold, and here I put the level at 68.07, which was basically the high from the previous week before we had that gap up. So here, look on the weekly chart, and you move this up to 68.07. That's it right there, and you can see from my perspective, simply holding across here, or the low of last week, if it sits and does nothing, it creates that risk of money just oozing into the market, and the idea of never shorting a dull market, wall of worry, all that sort of stuff. The market sits and sits and sits. Then we get near the end of the day, doesn't pull back, and money sneaks in that was waiting for the pullback. So on the Qs, we basically have, in my view, the only number that really matters is the close of last week, which is around 629.07. We're holding above it. Again, as long as we kind of hold above it at a period of time, perhaps late in the day or something like that, money can ooze in. So I want to just mention that. It's tightness. Tightness after strength is often a sign that there are no sellers and more money may enter. Now the Dow, DJI, here it is essentially holding that high from 2 weeks ago. And from my view here also, this is a spot where it's holding this level and it may have some potential to extend higher from here. Now the Russell is kind of really turning back into the dud. Well, it's a dud, but it's turning kind of back into what it has historically been. It just doesn't have that kind of thrust in it. And we've talked about this. We talked one time about the Russell versus the emerging markets. And I emphasize this because, if you're like a kind of mainstream investor, and you have your 401k or something, you can choose between things like emerging markets or small caps or something. And so they're kind of presented in that flavor. And that's not just like ordinary retail investors with 401k. That's actually a pretty significant way that a lot of people allocate capital, significant amounts for longer term investing. And so I think at this point, if you look down the performance tables, you're probably going to see that the emerging markets, have really outperformed this year and are continuing to. And I think when we look at this situation overall, um, I think we should kind of bear this in mind that I think that from a performance perspective here, the emerging markets continue to kind of take performance from the Russell. We've talked about the fundamentals, why the emerging markets may be more appealing to some people. But I do think that the Russell here might be kind of just fading, and it could be at risk of even breaking down and getting sucked back to the downside. And maybe no one even cares. And I think that's the biggest risk the Russell faces here. So we turn to the 10-year. Like I said, in my view, there are some potentially, good things happening in terms of inflation. But at this point in time, the Fed was moderately hawkish last week, kind of hawkish, kind of maybe, sort of. They basically had one dissent, which was not totally expected. And then Jerome Powell was, kind of measured in his commentary. So from my view here, we're just going to remain this. We're not going. I'm not going to, say we're definitely, but people might think for there is a potential here of some kind of range, essentially back up to kind of 4.25, kind of 430 area. So, from my view, this is something where people might want to just realize that this is no longer falling, doesn't seem to be giving that signal, and it does have some risk of, reversing higher. Now, the materials, the XLB, these might have some more significant downside risk. Now, the reason I say that is if you actually look at them in our article today, we actually talk about things like international paper, which really has, I mean, these guys do packaging. I mean, it's funny. Look at this thing. I mean, it's a small sector, and it has chemical companies, it has paper companies, it has metal companies, it has gold miners. I mean, it's kind of a crazy concept, the XLB. But the thing is, and in some ways, they do packaging. In some ways, they're more connected to consumer staples than you might realize. But the fact is, the packaging industry has done not well at all. You think, international paper, um, SW, which is Smurfit Westrock. They've really taken a beating. Let's look at PKG. It's another one I often look at. I mean, they have not done well for a while here. So I think when you look at it, I'm just talking about the overall price performance of these stocks. So from my view here, the XLB has a lot of issues people might want to be wary of. And from my view here, this might have some risk of continuing to kind of bleed lower. That's the XLB material ETF. Now the XLC, the consumer communications is interesting. Meta, they sold the earnings pretty good on it. However, what's interesting with the XLC is we basically have this high from mid-August, and then we have a low back here, the low of this week, when Trump kind of came out and said this was the that first week of October when Trump actually wait a second. No, that was the previous week. So this was the first full week of October, and the XLC kind of pulled back and it made a higher low kind of above that old peak. And now here it is trying to hold there again. So from my view here, this is something to kind of watch and wait. It might languish and sit around and chop around, and then people may look kind of later in the week to see if it holds, and then maybe some money sneaks back toward it. So from my view here, the fact it's holding these levels and it has a pretty healthy weekly chart is something to kind of bear in mind. But between the selling pressure in Netflix and Meta and stuff like that, it might have it might need to kind of prove itself. People might want to wait till later in the week and see if it can hold above those levels, and especially that high from back on the week started October 6th. Now, energy, in my view, here is just completely neutral. We did have some interesting news from OPEC when they said they were not going to increase production a lot more. Um, you know, it's kind of just drifting here, and it is interesting that we actually have seen some interesting, charts on some of these refinery stocks like Valero and Phillips 66 and stuff. I just want to mention that I don't, and we also have had companies like Halliburton do surprisingly well with their exposure to data centers and things. So my view is that these are like bullish surprises, and people over time might actually look for this to get faded. But for now, it does give a certain degree of positive thrust. the news out of OPEC over the weekend gives a degree of a positive thrust, but it is just kind of neutral. And from my view, people might still be looking for the longer term. We have a series of lower highs here going all the way back to more than a year, series of lower highs on the weekly, and people might look for this longer term weakness to reassert itself. But at this point, it's not giving any signals of that. But it also is not really, rallying in any way either. So from my view here, this is kind of has a structural downtrend, and it's just kind of sitting here, which might open the door for some drops. So remember, the oil inventories, I believe, are going to be on Wednesday. If they're still doing them with the government shutdown, they actually should be. So Wednesday morning, that could be the key catalyst for the XLE. XLF. So we kind of, mentioned that this has some issues, because of the cyclical story, because of the insurance story, and things like that. People might actually look for this. I mean, look, it went down to this level, around 51.88, but people might look for something closer to 51 on this. I mean, it's just kind of playing with this level. It didn't bounce here very much. This real low from back at the end of July, the week begun July 28th. This might be the real level people want to watch, on the XLF. XLI. Now, this is one that is, potentially inching toward a breakout. I think it's important to realize here is that it had a record weekly closing high. What is it? I mean, an inch to the high there. I think now in this one, people are going to want to see if we actually can close above the previous record weekly high, which would have been, that was at 155. I'm sorry, the close was at 54.91. So we need to really close it. People might want to look for a real close above 155 on this. And we're pretty close to it, but we're not there yet. So this is one that remains on a potential breakout watch, but it isn't there yet. XLI. Again, a lot of data center stuff coming through, a lot of engineering companies like Caterpillar, HVAC companies. Just today, there was an HVAC deal where I believe it was Eaton purchased a closely held company for data center cooling exposure. So the HVAC story remains part of the XLI. There's also been some interesting news. I mean, CH Robinson's an industrial. There was some news also with UPS last week that was interesting. So XLK, this was very similar to the Qs and the growth essentially the tech sector. And from my view as well, as long as it kind of holds last week's close, even it tries to go negative on the week, goes slightly negative, and then comes back. This to me is the sort of thing it sits and sits, and then the money oozes in. I will also mention what is kind of interesting today is that Palantir in the last few days has been breaking out again after kind of weeks of doing nothing. So their earnings are pretty. Wait, their earnings? Well, their earnings are this afternoon. Actually, I apologize. So that's actually something to just kind of keep an eye on. Let's move on now to XLP. Like we've been mentioning this, overall, the consumer staples, this kind of heavy feeling in these names. And from my view here, these are also now at risk. As we get toward year end, the laggards, window dressing works both ways, and the things that have been weak may get weaker into year end. So consumer staples here, really a pretty, this is kind of a real sign of a topping pattern here, that it failed to really get above its old high. So from my view here, this could be something that does have some more risk. XLP. XLRE is also the real estate, also kind of at risk. And it's so important to watch these ranges. We've been saying we need a breakout above 43 in this for a confirmation. And now it's just in the range back down to 40 and a half. This also, in my view, does have some other kind of risk. We talked about some of these companies having risk. Like, for example, I mean, if yields keep inching higher, that's a problem. And then the other, or it could be a problem for them. And the other thing, of course, is that we had mentioned some of these companies starting to see impairments as they start to refinance properties and put them up for sale. So the fundamentals in this area, haven't shown a whole lot of improvement overall. Now, utilities are interesting. We've talked about utilities many times, and here they are holding this level. And I think this is now actually a spot, 88. They're basically holding 89. It was a weekly close the first week, the week that began at the end of September. That was the close. It was the low the next week, came down, had a false breakdown under it, clawing its way back. Utilities here may be back to a spot where people are going to be back on that overall thesis of the, energy, electricity, data center, all that sort of stuff that has been a key part of the XLU. XLV. Now, healthcare has a kind of a split personality, because you have things like the HMOs which are not doing well, and then you have some of the pharma and biotech names and medical devices that are doing much better. So from my view here, this is just kind of stuck because I mean it's hard to really figure out. I mean, some of the news that's come out, some of the like United Health and stuff has not been good, and you know with all the other things happening with Obamacare and everything else, these subsidies and all this uncertainty. I mean, it's a pretty hard thing to really know what's happening with the sector overall. But I do think it's important to realize is that pharma names are doing well, and medical devices. We talked about Intuitive Surgical, for example, a stock that is showing some potential strength recently was Insight, INCY, IDXX. These are other kind of pharmaceutical related names that have been doing well. So I want to just kind of mention that as well. And the last one is consumer discretionary. So just get to that as mentioned as I had, and that's on the daily. But overall, to me, on this one on the weekly, the key thing is just here that we also essentially have at this point, we're sneaking toward. I mean, the previous all-time closing, the weekly close, the record close on a weekly basis was this level here from the middle of September, and that close was 41.39. So that's our level, and people may see with everything happening in Tesla and the things happening in Amazon, the potential for this to kind of extend higher. So those are the main things I wanted to talk about. It's great to see everybody. I will be back on Thursday with market trends. I hope everyone has a great day. Don't forget about the items I mentioned, the Supreme Court thing on Wednesday, which might have a little bit of interest, and then the Elon Musk thing on Thursday. See you Thursday afternoon at 2 Eastern. Thank you. Have a great day.